Hi guys, so I'm just going to go over a long that I took today in London session on NQ. So as always, this is not financial advice. This is mainly for educational purposes. So whatever I say or do is meant for learning purposes. Please do not take my words out of context. Okay, so with that being said, just like I said in the previous video, first thing I always do is look at the economic calendar. So going into the market today, checking the economic calendar. Monday, just like I said, I don't trade Mondays, so I let Monday go. And based off how Monday traded, I had no framework for Tuesday as well, so I also let Tuesday go. And now based off how Monday and Tuesday traded, being stubborn. So based off how Monday and Tuesday traded, that gave me narrative to frame trades for today being Wednesday. So obviously you can see Wednesday there are no restrictions, at least for me. There are no news events, so I can go into the market looking for trades in London or New York session, depending on the framework that is being offered. So in the previous video I mentioned I wanted this high to get run out, which we did today. And opening price, weekly opening price, we open here and we have this low, this low resistance lows, and we have this high. So it's unrealistic for me to expect these lows to get run out. And I honestly would not want to see this low get run out and price reverses and trades higher. At that point I would be so uncomfortable because now we would have price would have traded too deep into discount, and this is not something I want to see if I'm anticipating an expansion. So I wasn't really sure of what to expect, so I was mainly focused on these highs. My attention was on these highs, so I wanted these highs to get engaged so I could frame trades to the downside. But eventually we opened on Monday and we closed in a small range, which is something that I really like to see. So Tuesday opened as well, and due to how Monday traded, I had no framework, so we're still trading internally. So Tuesday opened and we engaged a relevant level, which is Monday's low. And just like I said in the previous video, the levels that I'm always looking to for lows or highs of the week is opposing close candle and opposing close candles like this, and daily highs or lows. So those are the levels I'm looking to frame intraweek reversals from. So I do not trade fair value gaps, breakers, or none of that stuff. So Tuesday opened, we engaged Monday's low, and if we go to ES, okay. Alright, so over here on ES, as you can see, we have divergence. So Tuesday failed to run out Monday's low. So what is that? That's SMT. So going back to NQ, so Tuesday ran out Monday's low, while on ES we didn't run out Monday's low. So going to the hourly time frame where I need to see my intermediate time frame confirmation to confirm a potential intra-week reversal. So we took our Monday's low and we had a close above those consecutive down close candles, which was very aggressive and which is something I really like to see. But the only downside to this is these candles, they are not appealing enough, they are not convincing enough, right? I usually want to see candles like this, big bodied candles like this, right? So these are the kind of candles that I want to see. And the minimum time frame I would go to look for a confirmation for an intra-week reversal is the 30 minutes time frame. So I would only use the 30 minutes time frame, the 1 hour time frame, the 4 hour time frame to confirm the low or the high of the week. So going to the 30 minutes time frame, what can we see here? We have these consecutive down close candles, and we closed through those candles, confirming a potential Tuesday low of the week. So going into Wednesday, I am also looking to frame continuation from relevant levels, which are highs or lows or opposing close candles. So we had those lows, and we have these down close candles. So ideally, I don't want to see price can trade to the 50% of these candles, but I don't want to see price close below it, because that would automatically invalidate longs for me. And this was more of a discretionary trade. So we opened up today, we traded below the opening price, and this was a pretty deep run. This is where the discretion aspect comes in, because I personally do not want to be seeing deep runs like this if I'm trying to frame an expansion on that day. So ideally, you want to see price open up. You want to see price open up. You want to see a small wick to the downside, and then an expansion. So this is an ideal expectation for an expansion candle. You don't want to see price open up and trade way down there, because that automatically means we could be having a reversal or a consolidation. So the only way I would partake in this is to be very conservative. So favorable narrative, you can go aggressive. Unfavorable narrative, conservative. So I'm going to be more conservative with my entry and more aggressive with my trade management. So I wasn't going to be longing from this low. I wasn't going to do that. I was going to wait for more information. So London session, we opened up, we traded way lower, and going to the 15 minutes time frame, which is what I use most times to confirm an intraday reversal. We engaged this level and we're trading inside of these consecutive down close candles. And when that happened, we have a change in the state of delivery. And that happened at a particular time of day that I look to frame lows or highs for London. So that happened by 3 a.m. So this happened, we had a change in the state of delivery, and just like I said, I wasn't going to be longing immediately here because I needed more confirmation. This could have easily consolidated today. So, and otherwise we also have this expansion candle. I can't even have a wide stop loss. So I waited for more information, and after that happened, we then traded lower into this candle again. What did we have? We had another close through this down close candle. So I entered on the open of the next candle. I had my stop here, 2R, scaled off something at 2R, and I held the rest to the daily opening price, because just like I said, I couldn't hold it to the external highs on the daily time frame because we had this. So this could have easily gone against me. This could have easily been a consolidation. So I had to be aggressive with my trade management. So I'm going to show you my execution here. Okay. So as you can see, this is my execution. So I longed around here, took out something here, took out something here, and I also let the rest run to these highs. So With all of that being said, let's quickly talk about my expectations going into tomorrow. So, it's a bit two-sided. It's a bit two-sided. It's very conflicting. It's not the cleanest, but however, there is some logic present at the moment. So we have Tuesday low of week, and whenever I have 3 candles into a relevant level, I will not be framing continuation longs or shorts. So we had these 3 candles into this relevant level. So tomorrow, ideally, I would want to see Thursday run out Wednesday's high for me to frame shorts to the downside. And at the same time, I would also not want to see the high get run out on ES because we already have a change in state of delivery on the hourly time frame, and we also have these low resistance lows here. So these are draws on liquidity. So these are levels we could be targeting tomorrow. And also we really have, this is a very indecisive candle. This is not the kind of closures that I want to see to give me confidence going into the next day. So tomorrow is also going to be the same approach, conservative. So I would like to see this high remain, ideally, but it's still possible for this high to get run out. In case that happens, I still will not mind if the narrative is there, that the framework is there to take shots, I will still take shots. So going back to NQ, I would want to see Thursday run out Wednesday's high. I would prefer to see it in the New York time frame, but if it doesn't happen in the New York time frame, that's still fine. And also tomorrow we have GDP, unemployment claims, and I think Fed Powell speaks as well. So those events are not significant to me because I classify them as low impact events, but they still offer some sort of volatility. So ideally, having all of that news events in New York, it would be preferable to see New York run out this high. So if that happens, I would definitely be looking for shorts back to the weekly open. So we'll see what happens. So that will be all for now, and I'll see you in the next one.